All right. Nigeria's financial sector is in focus at the 16th Annual Banking and Finance Conference hosted by the Chartered Institute of Bankers of Nigeria. Here's GDP growth in the second quarter of the year, 2.51%, of course, higher by about 20 basis points than where it was in the first quarter of the year, 2.3, but a slowdown from 3.4%, what we saw in the second quarter of last year. So, with this in mind, we're going to be speaking with Mr. Ken Opara. He's the president and chairman of the Chartered Institute of Bankers of Nigeria, joining us from our Abuja studio. Good morning to you, sir. Thank you so much for joining us. Looking at the financial sector, we take a look at the list of things that Nigeria's financial sector can add to the wider economy. There's, the need for more jobs in the financial sector, the need for a more adding more depth to the capital market, adding more liquidity, more IPOs on the NGX. What do you think, in your view, and with what you'll be talking about at your conference, what can the financial sector add to Nigeria's economy?
Thank you, Rotus. It's a pleasure to have me at this discussion. Just to say that the conference is the 16th Annual Banking and Finance Conference. I'll be converging at the city of Abuja at Transcorp, basically to have conversation, talking about Nigeria's economic development and empowerment, the role the financial services sector will play. We'll be looking at the area relating to the payment services, the payment platforms, using technology to drive that. Of course, added to that is also the fact that we'll be having conversation on how to support the real sector. Of course, export is very important, and how to unlock opportunities using SME. Really, knowing quite well, Rotus, that SME represents the engine of growth. They are very critical. They represent 50% contribution to GDP, which, of course, you've just talked about. We'll also be having conversation that will relate to payment system, of course, the fintech, and of course, what is happening in that place. The cyber security, as much as possible, we'll have conversation on that, because cyber crime is important that as technology evolves, you need to be very mindful of what is going to happen in that space. But more importantly is the fact that we want to look at contribution of the real sector, the agriculture, of course, the industrial sector, and then, of course, processing, which is very critical in supporting the economy to have a quantum growth as much as possible. Thank you.
Fantastic. So if we look at the second quarter of GDP, like the Nigeria's financial sector, I think it grew by about 26% or so. I know you're looking at the real sector, but do you think, there it is, 26.84% is what it grew by. And it was a big jump from the first quarter of this year, even from the last quarter, or rather second quarter of 2022. You think we can grow that number? Can financials and insurance, as far as its economic growth within Nigeria, you think can get bigger?
Yes, it can, Rotus. You are correct, and also its contribution at 2.5% of the GDP as at that point, in the working financial sector, essentially. When you take into consideration the fact that they also facilitate the payment system, support the real sector. And of course, you would also see that the banks are also helping to grow the non-oil sector, especially the agri and, of course, the export sector. So we are going to see a lot of interest, a lot of people also paying attention in that sector as much as possible. So you are totally correct. We are going to see growth increasing in what we have seen in the second quarter of this year, and we expect that to grow more than that.
Excellent. Now, I wonder if interest rates, what your thoughts are on interest rates? Because you talk about support for the real sector. If we look at what President Tinubu said at his inauguration speech, particularly about interest rates, he said that he wants to see interest rates lowered in order for that to be able to spur more growth in the real sector. So with where interest rates are now and the role that the financial sector plays in lending, to the real sector, can we see, because you know where inflation is now, you know where, borrowing rates are now, you know how much it costs to get a loan from a bank. Do you think we can see a situation where we can get lower interest rates in Nigeria?
Yes, I think essentially the interest rate essentially from the financial sector, you need to look at the cost of fund because the banks actually mobilize these funds and of course what it costs. And, the providers of this fund will also be looking at positive, real interest rate to be able to be above inflation. But having said that, is that we think it will, given the fact that there are also specialized development institutions, like, of course, the Development Bank of Nigeria. Central Bank has also specialized development funding unit that provide interest rate, of course, close to single digit as much as possible. But what is important is the fact that as we begin to also support these sectors and pay attention to them, of course, interest rate to that sector will continue to go down. So we think that is going to happen, but it's not something that is going to be a flight by night thing. It's something that, of course, you look at the key sectors as much as possible, and then be able to say for agri, the industrial sector, the SME, maybe we need to have also a dedicated bank that will support this area and provide single-digit interest rate at longer tenor, while the other banks would also provide maybe working capital support that are short-tenored and as much as possible also be sensitive to what the interest rate would, the cost of fund would, these institutions will afford. So we think it's going to go down, but it's going to be gradual. And of course, inflation is still rising and as much as possible. But we also agree with the reform agenda to drive interest rate. And so particularly, you will see specialized institutions and collaboration to be able to drive down, of course, the cost of funds.
I'm sure, I'm guessing that, the foreign exchange might be a topic at the conference, seen as, we're import dependent and a lot of people depend on FX. And there, of course, have been the reforms with respect to collapsing the multiple windows and so on. How do you think the conversation around foreign exchange will happen at your conference, if at all?
Yes, there's been conversation on the foreign exchange market, and of course, is to applaud the unification of the foreign exchange to avoid round tripping, to avoid people taking advantage of, costs and rate that might not actually reflect what the market is doing. But conversation around that would be, how do we diversify the economy to generate more foreign exchange export, which of course is a critical sector that drives foreign exchange earning. We will definitely have people expert on that area, having to be able to discuss on what we need to do to drive export. Not just driving export on the area of raw material, we need to increase processing, because of course you know that Nigeria, most of the time you export raw material and then of course import finished goods. So the emphasis is on how do we add value through processing and support that area. And you can see that banks are also supporting that area to ensure that we actually drive, the areas that are also helping to grow the foreign exchange. So conversation will be on export, capital, inflows, diaspora, remittances. How do we make it in such a manner that people who are outside the shores of this country actually have interest in remitting the needed foreign exchange inflow into the country? And as much as possible, when they have need to get that, they will also be able to repatriate it. So those are the conversations that we hold on, and I'm sure that it will be very exciting.
I can imagine it will. The financial sector is so big, and it entails a whole lot. So, what's your outlook for the Nigerian economy? I mean, we're in September now, only have a few months to go before the year is over. Do you think that for the financial sector and for the rest of the economy, that the reforms that have been put in, do we see the effect of that in the new year in 2024? What's your outlook as we look at the economy and as we get to the end of this year?
Yeah, Rotus, I think what is important is discipline execution. I mean, the reforms are very great. I mean, basically, the removal of subsidy, the foreign exchange reform, unification, and then, of course, the key other things that are actually meant to support the SMEs. And so it has a gestation period, and I want to say clearly that it has to take those period of time, and then of course we begin to see the impact positively as we move it down to 2024. First quarter, you begin to see growth in some of those areas, especially the SMEs. I mean, most of those funds, especially dispersed to them, and as much as possible, they will then be in the position to build capacity, because that's very, very key. So we see that immediately the pens are there, and of course we'll continue to get through. But as we begin to unwind and implement some of this reform diligently, you begin to see that the positive impact will begin to come up. Don't forget that infrastructure, of course, they also talked about that, which is critical. And we think that once that is put in place, and of course the power sector, you begin to see positive development in the key areas. And then, of course, there will be growth that, increasing, of course, on the GDP, more than what we saw on the second quarter and, of course, the first quarter of the year.
All right. Positive notes to end the segment on. Mr. Ken Opara, President Chair of the Chartered Institute of Bankers of Nigeria. Thank you so much. Looking forward to that conference kicking off tomorrow.